I spent $30,000 on TikTok ads. We're gonna go over what's working now, the new stats and strategies, and what's allowing our clients to thrive in this market. Give you some insight on what our goals were. We were wanting to keep our cost per lead low, or we wanted to increase the amount of quality leads that we were getting. One of our main metrics that we look at is our cost per quality lead and not just the total cost overall, because we could get a lot of leads at a very low cost, but most of those are going to be garbage. So we instead pay more attention to the cost per quality lead. And as expected, our costs started rising. And this happened because of a couple of different reasons. One, we were spending more, a lot more. And two, rates started going up, which started to price a lot of people out of their markets. And three, which I'm sure that you have experienced the effects of, is that the media and people's friends and family, everybody and their mama is telling people that right now is a horrible time to buy, rates are too high, home prices are too high, and the market is about to crash. And this all started to happen pretty quickly, so we had to figure things out quick. If we didn't, then our business would be toast and our clients' businesses would be even toaster. The first thing that we started doing is analyzing our videos and creating new video creatives to test, and we really needed to get our amount of quality leads that were coming through the pipeline up. And a quality lead is one that has a good credit score, money saved for a down payment, favorable debt to income ratio, and is looking to buy pretty soon. And after a lot of different variations and testing, we started to narrow down what we needed to do this, to get a higher amount of quality leads. And we started to figure out creative and resourceful ways to take the leads that weren't as high of quality and turn those into deals as well, which we'll cover later in the video. Now, before, our videos were up to 51 seconds long, but what we found is that videos 21 to 34 seconds long gave us over 250% increase in conversions. Also, we were using videos that were successful on YouTube, which are in a horizontal format, similar to what you're watching right now, but once we switched to the vertical format, our conversions nearly doubled. So now we were paying more per lead, which was about $5 to $6 on the high end, but our percentage of quality leads that were coming in went up to 60%. So that's a lot of numbers. So what does that all mean? Pretty much we were able to get more quality leads at a lower cost, even though our cost per lead overall was higher. So the question is, what do we do with all the leads that don't qualify, that maybe don't have the best credit score, don't have money saved for a down payment? Because what we wanted to do is everything that we got in, we wanted to get as much out of it as possible and not just work with the people who had good scores and had money saved out. So the first thing that we did is we built personalized and segmented follow-up campaigns that we could put people into, the little different buckets that would follow up with people and give them value based off of whatever the goal was that they needed to accomplish to become loan ready. It did work to an extent, but we needed to figure out a way to turn as many of the leads that were coming in into future deals as possible, especially because the market just kept getting worse, and it looks like even from the time I'm recording this video that it's going to continue to get worse before it gets better. We did try some credit repair companies for a bit, but as you've probably experienced, credit repair companies are kind of, here or there to work with. You send one of them a referral, and then you don't know if they signed up or if they're still going, how far along the process they are to getting loan ready. It's kind of just like referring them out, and maybe you hear back, but you probably won't. We actually started to get pretty discouraged with the credit repair company, and that's whenever one of our clients that we work with introduced us to a company that their brokerage works with and has worked with for a bit, that actually coaches people on getting them loan ready. Regardless of whatever the reason it is that that person can't get pre-approved, whether it be credit score, they don't have enough money saved, debt to income, or maybe a combination of those, they actually coach people one-on-one from start to getting loan ready, and their success rate was really high compared to what we've seen in other similar offerings. 25% of everybody that went into their program ended up being loan ready within 6 to 8 months. They even helped these people get all their documents together for the loan officer before sending them straight back to the loan officer that referred them. We saw a huge opportunity to form a partnership with this company, and that's what we did. We worked out a partnership where we have somebody calling all of our clients leads that aren't able to get pre-approved, so our clients don't even have to talk to them, and then we send them to this company on our client's behalf So we start to fill our clients' pipelines with leads that are going to turn into deals in 6 to 8 months. And this is just one of the ways that we're working to take as many of the leads that we get in as possible and turn them into deals, even if it takes 6 months to do that. Now, this alone pretty much doubled our clients' results, because not only are they getting qualified leads booked straight to their calendar, which I forgot to mention that we book the qualified leads straight to our clients' calendars, but we are also taking the leads that aren't able to get pre-approved right now and putting them in the best scenario possible to increase the chances as high as possible that those leads will turn into a closed loan. And of course, with the market being like it is, we were still looking at ways that we could put our clients, our loan officers that work with us, in the best position to not only survive, but to thrive in this market. And that's when we realized that we need to also help our clients form realtor referral partnerships. But before I talk about how we did that for our clients and helped them hook up with realtor referrals, let's talk about some of the challenges that there are with running TikTok ads that you may not experience with other platforms. One thing that we found is that TikTok videos need to be refreshed every 2 to 3 weeks. It's a lot of analyzing videos on why they worked, why they didn't work, and then re-recording and re-editing brand new creatives to then test on multiple different accounts. So you may be asking, if it's so much harder to do this on TikTok, then why wouldn't we just do Facebook or Instagram, where we could just make a quick photo and some text and throw it up? And the reason is that TikTok ads work at least 5 times better than Facebook and Instagram and these other platforms. And trust me, we've tried almost all of them. And in this market, it's important to be as resourceful and creative as possible. So if you're going to spend money on marketing, you want to make sure that where you're putting your money, you're going to get the highest return possible. That brings me to what I was talking about earlier, is whenever we realized that we needed to help our loan officers not only generate them leads like we've been doing and turn as many of those leads into deals, but also to build new realtor referral partnerships. And with the market getting tougher and tougher right now and interest rates going up, loan officers all over the country have realized that refi deals aren't as lucrative as they were 12 months ago or even like 8 months ago. So almost all of them are scrambling, trying to figure out what to do next, and most of them are focusing on building a purchase-based business. And there's really 2 main options for doing that. One is you could do your own marketing and pay for your own leads, which puts you in control of your own business and your own pipeline. Or 2, you could focus on forming new realtor referral partnerships. So the problem with going out right now and trying to form new realtor referral partnerships is that there's a lot of loan officers all around the country doing the exact same thing. Before, you might have had 5 loan officers to compete with, try to get a realtor's business, but now you could have 10 or even 15 all trying to meet and get coffee and get that realtor's business. Really, realtors are also hurting in this market too, right? The interest rates are increasing. That's hurting their business, their purchases, their affordability with their buyers. So you could put all this time, and then maybe you do get one of these real estate agents to use you, but they could not get any deals for another 6, 8, 9, 12 or more months. But there is a way that you can get those realtors to work with you, and not just real estate agents that aren't producing anything or that are brand new, but real estate agents that do have some volume and do have their own deals coming in. The best way that we have found to build new real estate referral partnerships, real estate agent referral partnerships, is to pay for your own marketing and then use your leads as leverage to build that relationship, because you're going to be getting leads that are qualified and you need a real estate agent to help them find a home. So you refer that lead to agents that you want to work with, and there's a lot higher chance that they will send you somebody when they get somebody from their database. I mean, just think about it for a second. You're a real estate agent, you have 10 loan officers all trying to meet with you and get your business, but one of those loan officers sends you a deal that is pre-approved and ready to go. And then a couple months later, I get a lead that wants to buy a home. Who do you think I'm gonna send that client to? probably going to send it to the loan officer that also sends me business. So following this logic, we started talking to our clients to find out who was actively using the leads that they were getting to form new realtor referral partnerships. And what we found is that it is extremely effective. What we were doing during the initial call was telling our clients that they should do this, but it was kind of up to them if they wanted to or not. What we found is that the clients who did have already formed 3, 4, or 5 brand new realtor referral partnerships from using the leads that they were getting as leverage. So it was super effective. So we started reaching out to real estate agents to connect them with our clients, but we didn't just reach out to any real estate agent that we could find, because I mean, what's the value to you if you're talking to an agent that just got their license yesterday or hasn't had any transactions in the past 6 to 12 months? There's not really a lot of value to you. And agents who are pretty much married to a loan officer already, that's just a waste of your time, right? Because what are the chances that they are going to leave the person that they've done their past 5 transactions with just to go to you? So we started only sending real estate agents that had done a minimum of 6 transactions in the past 12 months and had a high chance of not having a die-hard relationship with another loan officer. And they couldn't be brand new agents, so they had to have at least 6 months of history. And if they did only have 6 months of history, they needed to have at least 6 deals in those 6 months. And we have that criteria set in place because if we're going to connect you with real estate agents, then we would want to, and you're going to send your leads to that agent, then we would want to find an agent that could potentially send you leads, because that's the whole point of this, right? So our clients were getting to meet with real estate agents that had a high chance of being open to a referral partnership with them. They use their leads as leverage, and the partnership that we have with that company that we can, you don't need to talk to the clients, and we can send leads to this company that have a high chance of turning them into a buyer in 6 to 8 months. That's also a huge value add. And on top of that, we nurture realtors' leads, their database for them on behalf of our clients. So that gives them another value add on top of all the others that they can use to get more realtor referral partnerships. And all of this is what led to the system that we use today that's transformed over the past 4 or 5 months, that's getting our clients killer results. And that is where marketing, where we can get the best results. We're turning as many leads that come in into deals as possible in all kinds of creative and resourceful ways for our clients. And we're helping our clients connect with real estate agents who would be great referral partners. If you want to find out more about what we do for our clients, I left a link down in the description. And the thing is, if you really want to thrive in this market with rates going up, then this video is not enough on its own. There's actually one more thing that you can do that will cause this strategy that we've laid out here to be 10 times more effective and get you a lot more closed loans. And that's why you should not ignore this video right here, because it's going to show you a secret referral source that most mortgage loan officers don't know about.